Divi's Laboratories posted an extraordinary set of numbers in its Q1 results, providing a strong attestation for the underlying growth in the API sector. In our Ideas for Profit today, we look at the takeaways from the first ever conference call from the largest API manufacturer of India and evaluate what is in for the investors. Well, revenue growth of 49% was broad-based and volume-led. Generic API business, which constitutes 52% of sales, posted 54% growth, and custom synthesis business, which makes up to 41% of sales, was up 49%. Rest of the sales came from nutraceutical business. Company is catering to pharma ingredients demand related to COVID such as HCQ, Favipiravir and intermediates for Remdesivir. However, revenue share of these products is not meaningful in the quarter gone by. Company is also undergoing a huge capex of 1800 crore, which is expected to complete by second half of FY21. About 50% of this capex is already commissioned and commercial production has started at 2 SEZ sites. Stellar result from Divi's labs has both transient and structural trend incorporated. On one hand, there is lumpiness in the result due to wide prevalence of drug shortage leading to surge in orders. While management maintains that pricing was stable, pass-through effect of increased freight cost may also have been contributory elements. This, however, doesn't take away the case that global trend of de-risking supply chain away from China is adding to order inquiries and product dispatches. In this respect, company's ongoing capex plan should be helpful in capitalizing the opportunity due to drug shortages, pandemic and shift away from China. Management expects that production capacity would increase by 20 to 25% due to ongoing brownfield expansion. Key risk, of course, for the company is delay in capex project and any unabated disruption in supply chain due to geopolitical developments or due to COVID. Company is also awaiting resolution of legal and regulatory hurdles for the Kakinada plant. Any positive traction in this can help upgrade analyst estimates. The stock is not cheap, trading at valuation multiples at 26 times EV to EBITDA for financial year 22 earnings, but company does have a strong free cash flow. Such a spectacular result from the sector leader certainly has an implication for a sector-wide trend, and in coming days, we may witness further trading rally in small and mid-cap operating in the API space. We have already seen strong rally for the likes of Solara Active, Titech Industries, Aarti Drugs, Sequence Scientific, Laurus Labs, Jubilant Life to name a few. However, investors should stay prudent and book gains in scripts wherein valuations are unjustified. By and large, barriers to entry for API sector is not very high, and a sustainable prospect of growth would eventually invite elevated competition. At the same time, investors should avoid wherever there is concern with respect to balance sheet and promoters.